Okay, welcome back. We've got the a pre-open session coming up on us in just 3 minutes or so, counting down to it. Ashish Chaturmoda, Director, Head of Research at JM Financial Services, is joining us on the futures and options side. Ashish, great to have you with us here. Thank you very much. While we are looking at the cash figure from Tuesday, which was a stunner, mix up the F&O cues also. I mean, because we should look at the comprehensive picture, what FIs did on the futures and options side and what that is telling us from here out. What are you seeing?
Hi, good morning, Prashant. So I think, see, broadly, there's a strong, accumulation of long positions which happened in the last, two trading sessions. And if you look at the broader picture, it looks like 17,300 and 17,400 is the area where a lot of, put writing has happened. So we believe that if there's any gap up, ideally around 17,300 to 400 zone, we might see good support emerging into the market. If you look at the contribution of the top 10 stocks of Nifty 50, there is a good OI buildup on the long side, as well as a strong delivery activity which has happened. So which clearly indicates that, I think any dip on the market is going to be an opportunity to go long. Ideally, till the time we don't break 17,300, we have to maintain this bias. Only in case if we breach 17,300 on closing basis, that's a time I think some kind of caution need to be taken care of. Otherwise, I think it's a buy on dip market. And we like, stocks which we discussed last week also. So first pick within the banking basket is ICICI Bank, where we have seen very strong OI build-up, strong delivery volumes. And from a valuation perspective, also, we feel that ICICI Bank is trading comfortably with 17% kind of growth on the credit side. Credit growth side, it looks like ICICI Bank is going to lead the entire banking pack. So with 874 as a trading stop loss, ICICI Bank could be bought for a immediate short-term target of 930 to 950 trajectory. The auto basket is showing very strong traction, and within that, Maruti is trading at a 5-year high kind of period, zone with very strong OI build-up. So I think this stock also has witnessed a strong rollovers. So I think with 8,800 as a trading stop loss, Maruti could be bought for a fresh upside target of 9,400 zone. In the capital goods basket, L&T is showing very strong signals. And I think here, if any dip comes, then around 1885, there is going to be a good support in L&T. So keeping that in mind, I think this could be initiated as a buy idea. On upside, 2050, 2100 is positional target we are looking in L&T. And last but not the least, the entire consumption space is looking very promising, whether it's Titan, Jubilant Food, or whether or in the consumer staple side, whether it's Nestle or Hindustan Lever, all showing very strong traction. So within that, I think Titan is one stock which has given a massive breakout on the monthly chart, about 2540 trajectory. So keeping 2540 as a trading stop loss, Titan could be bought at current levels. On upside, we expect the stock to hit its previous all-time high and can target somewhere close to 2750 in the next couple of trading sessions.
Okay, thanks a lot for those ideas and have a great day, Ashish. Well, the pre-opening rates are settling. The Nifty is down about 300 points as we discussed earlier. Couple of stocks, Z Entertainment is down 10%. We'll wait by for these rates to settle. The ones that are perhaps from the frontliners that are indicating some weakness is Axis Bank, Asian Paints, Infosys, Hindalco, TCS. And on the upsides, you have Hero MotoCorp ahead of the numbers in August. Hero MotoCorp is trading a tad bit in the green. But let's find out what's happening in the world of crude as these rates settle down. Crude prices dip further to around $95 a barrel as recession and rate hike fears along with increased COVID restrictions in China weigh on demand expectations. Vandana Hari of Vanda Insights joins us now to give us a quick update on that. Vandana, thanks a lot for joining us. So this seems to be the big fear, right, that the US heads into recession towards the end of the year and demand will get hit. What is your own prognosis?
Good morning, Sonia. So indeed, that is the backdrop of the volatility that we are seeing in the oil markets, which is evolving expectations of the economic health globally. If there is a recession, how long, what is the timing, when will it hit, how widespread will it be, and how deep it will be. And then from then on, of course, the oil market participants need to derive their expectations as a result of global oil demand trajectory. So there's quite a few dots that need to be connected and quite a bit of unpredictability that still needs to be sorted out. And, the market will work its way through it, and we'll probably see continued volatility as a result of that. The U.S. economic picture in terms of macroeconomic data as well as oil demand data has been quite different from the rest of the world in terms of market sentiment and also divergent in itself. So, somewhat surprisingly, US macroeconomic data continues to be quite strong. The jobs market there is holding very, very firm. And consumer sentiment, retail spending is also still holding. But when you look at the oil demand data from the US, overnight we had figures, the weekly data from the Energy Information Administration. And if you look at a 4-week average to smooth out the wrinkles of the weekly data, US oil demand is 6% down year on year. Now, again, there is quite a bit of skepticism in the EIA demand figures. Overall, the market thinks that the EIA might be understating oil demand, and that oil demand in the US is still holding up. The big question, however, is how long will that continue to be? Especially if the country enters a deep and long-term recession for a few months at least, if not longer.
Vandana, hi, good morning. So much back and forth, right? Will on OPEC Plus and what they will do. Will they cut output? That was the indication we got from Saudi Arabia earlier. Prices went up $10. Now indication that maybe not so. And prices are back down $10. What is your best guess in terms of what happens in the next couple of days?
Yeah, I do not expect them to cut output at this stage. I think what we saw from the Saudi energy minister was a bit of saber rattling, an effort to put a floor under prices. If you recall the day the statement came out in Bloomberg, which was August 22nd, last Monday, there was at one point Brent threatening to fall below $90 a barrel. There was a great deal of volatility and a great deal of downward pressure. And of course, his comments had the magic on the market, at least the magic that they would have wanted to see, and pushed prices up. Look, I think OPEC Plus will probably want to keep that option open, especially if Iranian oil comes back into the market. As of now, there are no signs. I don't think we are going to get a firm indication on that when the ministers meet on Monday as to whether we will get the Iranian oil back in the market. So I think they will keep this option in reserve. Also, they would want to avoid being uber hawkish at this point. There's been a lot of pressure on OPEC Plus from consuming countries and, not in the least US, to try and keep prices down. So not a reduction at this moment. Even a reduction, the question of reduction is also going to be quite complicated for OPEC Plus. As we know, they've been pumping almost 2.9 million barrels per day below their combined target. So, how do you actually reduce? So the reduction figure will have to be more than 2.9 million barrels per day. So the optics of it and the practicality of it it's a bit complicated as well.
Okay, Vandana, we leave it at that. Thanks a lot for joining in and have a great day. The pre-opening rates, by the way, have settled about 270 points lower. A couple of stocks do deserve mention that are in the news. SpiceJet is down almost 4% after reporting steep losses both in Q4 and Q1 and for FY22. That stock is getting hit. And on the upside, you have Ashok Leyland, which is the big mover right now. It bagged that mega bus order for 1,400 school buses in UAE, so up almost about 0.6%. Okay, volumes are picking up. But otherwise, indications are that the market will start about 260 points lower. Would be very interesting to see if the dips get bought today.
Oh yes, 17,497 on the Nifty. I mean, I still would want to see the actual opening and see how that is, and then of course take it from there, because the market was very strong on Tuesday, and almost every dip consolidation was getting bought, and so in that sense there was some sign of decoupling. Whether something different happens today, we'll find out. Maybe the first hour is important to track. Let's take the 9-10 calls a bit early today, and then we'll move to a corporate conversation. Sudarshan, the pre-open of course still settling in, but let's assume that it settles somewhere around 17,500. What would be your Nifty trade, and what's the 9-10 call?
The Nifty trade would be to go long after market stabilize for 1 hour or so. The lows of the first 1 hour would be my stop loss. And ICICI Bank is a buying opportunity. I can't give levels because of the gap down, but you should still look to buy it.
It's at 860 now. It did well, of course, on Tuesday. Supported the market quite a bit. Mitesh, your thoughts?
Anuj, my 9-10 call would be, I'll take a buy on Colgate around 16.55 with the stop at 16.30 for targets of 17.10. I think that's one stock which is clearly showing signs of starting a new trend.
Okay, all right, Mitesh, thanks a lot for that. We're actually heading into the market opening, but in the meantime, we also have another stock in focus. Biocon is the company that we're speaking to. The US FDA has issued 11 observations each for its 2 sites in Bengaluru and 6 observations for the Malaysia site. Shreyas Tambe, who is the Deputy Chief Executive Officer at Biocon Biologics, joins us on the phone line to talk about that. Shreyas, if you can tell us how serious are these observations and any data integrity issues that have been pointed out by the US FDA?
Morning, Sonia. Thank you for having me on your show today. Let me first at the outset clarify that there are no systemic non-compliances that have been cited in any of these observations that the agency has put out. And there are no data integrity breaches that you specifically talked about. So let me put that out there first and then give a little bit of context to what these observations are about. Typically, when a pre-approval inspection happens, it is usually for one site, for one pre-approval for a new product. Now, since we didn't have inspections since 2009, we've been waiting for the agency to get over to our facilities. This inspection was at 7 different manufacturing facilities at 2 different locations, Bangalore and Malaysia, for 3 new products and also for a new facility that we brought into our manufacturing network. So if you were to view this in context, this was like 5 different inspections conducted over almost 20 plus days by over 8 inspectors. So that's a pretty large inspection. So these need to be viewed in light of what the inspection scale was, Sonia.
Okay, so you're saying that there are no data integrity issues, breaches observed by the US FDA and no systemic non-compliances post the US FDA inspection, right? So that is a positive. Can you tell us, was this a pre-approval inspection? And is it because of the biosimilar launch that you have? And if so, can you just tell us what the future course of action is?
Yeah, as I said, there were 3 different products, 3 new products that we are looking to bring to the US market. And as a part of the process, it requires the agency to inspect us for the manufacturing site. And these are 3 different facilities that they've inspected, 3 different products they've inspected us for, over 7 different manufacturing facilities. Now, as next steps, it's a part of the process. They've cite these observations in a form 483. The number of the form is 483. And we will respond to these observations through a CAPA plan, Corrective and Preventive Action Plan, over 15 working days, which is the time frame that is provided by the agency. And we're confident of being able to respond to their observations in these timely manner.
Okay. Does this in any way impact the approval timelines for FY23?
Sonia, at this time, post the inspection, we have no reason to believe that there is any change to that timeline. The inspectors didn't indicate any change to that approval timeline.
Okay, no changes to the approval timelines. So that's good. Can you give us a status of the Viatris deal being completed?
Like we had shared with you in the past when we signed the deal in February of this year, this calendar year, that we would be looking to consummate that and close the transaction by the end of the first half of this fiscal, first half of H1, as we said. And we are on track for that. We look to close that end of September.
So if you're closing the deal by the end of September, what about the fundraising? You were looking to raise money via the equity route. An update on that?
Yeah, again, on that, we had guided that we will be funding this transaction with a mix of equity and debt funding. And again, here too, we have a lot of interest. We've always had a lot of interest from debt funding. We have that covered, and likewise with equity as well. And we should be in a good position. As I said, we're tracking to the original timelines that we had laid out. It's only subject to the statutory approvals, which we expect to get as planned.
Sure, we leave it at that, Shreyas. Thanks a lot for joining in. I'm sure your comments will provide some solace to the investors. But for now, the stock is still under pressure. By the way, Bajaj Auto's numbers have come out. Although the overall numbers are not looking too bad, it's the export market that continues to get hit. So export numbers for Bajaj Auto is down 28% year on year. That's because, remember, Egypt has banned three-wheelers for the last many months, and that has hit Bajaj Auto in a big way. So that's the export piece. The domestic piece actually has picked up. So just look at that. The total sales have now hit 4 lakhs. It's the highest that we've seen in the last many months, and that's because of the domestic sales. So domestic sales have gone up almost 50% year on year at 2.56 lakh units versus 1.72 lakhs. The worst of the chip shortage issue also for the premium bike segment is now behind us. So that has aided Bajaj Auto. But I think the export problem is something that needs to be fixed. And the management last time around told us that Egypt, the ban continues. So, you know, they can't do much about it except perhaps sell lower number of three-wheelers.
There were also, reports that I read of currency, forex shortages. I mean, dollar shortages in markets there. Egypt, I think, is the one. But they also, of course, export to other countries in the Middle East. So that's something to watch out for. There's 2 minutes to market opening. Z is going to be in focus. It's got important news flow. Let's address it again. Mangalam is standing by. Mangalam.
Indeed, Z has important news flow behind it, and there are two of them. The first one, of course, is the fact that they've signed a licensing agreement with Star to air on linear television all the ICC events between 2024 and 2027, which would include a couple of T20 World Cups, a Champion Trophy, as well as the 2027 Men's World Cup as well. Analysts believe that this would not dent their profitability by a lot, even though deal financials have not been disclosed, but it would help them boost their linear TV viewership, because sports was a missing wheel in missing cog in that important wheel for Z. The second important news that came by as well was a news report that suggested that the Competition Commission has some queries with regards to the impending merger between Z as well as Sony, and to that Z has said to us that the report takes the article takes the numbers from FY21, which indicates that the combined market share of Z and Sony was about 40%, but as of FY23 that number has dropped to around 36%. So they are not worried about these questions because they're in constant dialogue with the regulator.
Mangalam, thanks a lot for that. Let's now focus on the market opening. The Nifty level that I referred to, 17,166 to 17,401. The 20-day exponential moving average is 17,425. So let's see if the market wants to respect them. The first rates are in, and the Nifty is down about 248 points. So better than what the SGX Nifty told us, above the 17,500 mark. But let's wait for maybe another 5-6 minutes. The Bank Nifty is opening about 600 points down, but that's also slightly better than what you would have sort of assumed looking at the SGX Nifty. 230 down on the Nifty now. Actually, that's not too bad. 17,530 is what you have. And the broader market, advanced client, something that you want to keep an eye on, because that normally gives a first indicator of how things would move. 215 down on the Nifty now, so not as bad as what the SGX Nifty told us. So in terms of stocks, IT stocks are leading the decline. So Infosys is down 2.5%. TCS is also down quite a bit. A couple of banks are also down actually. Kotak and Axis, throw in ICICI Bank as well. That's also down. HDFC Bank, Reliance is a bit soft. Bajaj Finance is starting a bit soft. HDFC, in fact, HDFC Twins are both down. HCL Tech, another IT name. But overall, the market is not as bad as the SGX Nifty told us. Remember, we're sitting on a 350-point rally, and to give up 200 points, I guess it's okay. In terms of gainers, you have Sun Pharma, which is right on top, Bharti Airtel, and Bajaj Auto are the other stocks doing well. Now the Nifty has cut its losses to less than 200 points. 17,558 is what we have. And going by the SGX Nifty, this will still classify as a better than expected opening. And the Bank Nifty is down about 500 points. Sonia.
It's not a bad opening, you'll have to say. The mid-cap index is down, but not out. About a 0.3% loss that we're seeing. The advanced decline ratio also split down the middle, really, so a bit tentative there. The stock of the moment on the downside is SpiceJet. It's a 9% cut that we're seeing on SpiceJet. As I was telling you earlier, steep losses both in Q4, in Q1 and in FY22. And the management says that it was the worst operating environment that they've had to deal with. So SpiceJet is not looking good at all at the moment. On the upside, you have Ashok Leyland that's piling on the gains, 2.5% on the back of that very good order win. Now Ashok Leyland is up almost 30% for the year. By the way, Escort's numbers are also out. the initial numbers don't look too bad actually. Tractor sales growth of 7.5% year on year. Domestic sales are up by 7% as well. And the stock is trending in the green at the moment. Talking about green stocks, Adani Group stocks continue to do what they do best, which is rising. You have Adani Power that's up in the green right now. And a couple of the other names too that are charging ahead and outpacing the market. Dish TV, you have GMR Power, Zomato, RBL Bank, IDFC First Bank that are also bucking the trend this morning and trading in the green. On the downside is the IT stocks that are dragging the market's feet. So Infosys, Wipro are under a bit of pressure, and that's perhaps the reason why the overall headline index too is seeing a big cut.
200 points, but better than, what many were fearing looking at the SGX yesterday or even this morning for that matter. So 220 lower. Well, let's just take a look at some other names. So TTML is up 6.5%. We've been highlighting this for the last couple of days. It started to run. Ashok Leyland, of course, we highlighted. Zomato is up about 1.7%, 1.8%. There is Nelco, which just, is jumping up like there is no tomorrow. We had the management of Nelco join us on Monday, just 2 days back, and they said the big opportunity, the game here, or I guess what the market is getting excited about is the fact that they're offering internet on airplanes. But that's only for international aircrafts passing over Indian skies. They say that the big opportunity is when domestic airlines will start to offer this, and they'll be in contention to provide those services. But that's 2 years away. So that's just what they told us 2 days back. 1,040 on Nelco now. There is what else? Anantraj, which is up about 3%. Affle is starting about 1.5 higher. Lemon Tree is up about 2.7%. But I don't want to look at things with very little volumes. And there are a bunch of them at this point in time. On the downside, banks are seeing some cuts. Reliance is down about 2%. These are, banks and Reliance are the two areas which saw big moves on Tuesday, which kind of propelled things higher in a pretty significant way. And of course, IT is under pressure once again. There's nothing outsized in terms of specific stocks which is going on right now. So we'll, I guess, give it 10-15 minutes more and do a quick recheck. Our market master of the day is Ajay Srivastava. He's Chief Executive Officer at Dimensions Corporate Finance. Ajay, great to have you with us here. Thank you very much.
Good morning.
Will the mystery buyer, the big mystery buyer from Tuesday, show up once again, Ajay?
Well, you can ask for Santa Claus to come early.
What's going on? What are your thoughts on the market now, Ajay?
I think, I have never felt better in the market because this is a good market which gives you a chance to get in when you want to get in. It gives you a good chance to hold off and sit on the sidelines when you need to, and is not giving us too much of risk at this point of time, at least on the call, because of the purely demand supply of paper in the market. With the IPO drying up, it's all down to secondary market. So, in India, Prashant, the best part of Indian market is that at the end of the day, Indian market needs at least 1 lakh crores of paper every year, incremental. That's a demographic dividend that we have it. Whether insurance companies put together, mutual fund put together, EPF now, Provident Fund Trust put together, they need 1 lakh crore plus paper to come into the market. Now, if there is no IPOs of this magnitude, it has to be secondary market buying. And that gives you comfort that at least from the sales side, FPIs can sell, but domestically, the market is in need of fresh paper. And if there's no fresh paper, they will buy secondary market.
Ajay, good morning. Do you remember the movie Naam with Sanjay Dutt and Kumar Gaurav? I think you would have seen it, right?
Yes, I heard. Yes.
In that movie, Paresh Rawal tells Sanjay Dutt, right? This is a one-way street. You can only come in, you can't go out. I'm saying this because this is the issue with FIs face, right? When they go out, you see the kind of price damage, but just to buy a trickle and the market's back to all-time high, so the impact cost is really high for them. But do you think there's something similar would play out once again?
Well, I wish Indian cinemas do better, my friend, because they're not doing well. So I think we need to get back some old movies. But yes, the answer is very clear. Now we are no more scared about FPI selling. We know for sure that when they sell and they sell big, you get a good chance to buy into the market. So I think that scare which we used to have, the FPIs can dictate the market and they are smarter than us. I don't think that's come out true. I think we as Indians and investors, we have been smarter in what we have been done with our investment profiles. When I look at my colleagues in the US, etc., I think we're doing better, and certainly we're doing much better than down in Japan, where the fund is down 40-50%. So I think there's no reason for us to believe, except the fact is all good things will come to an end. And these kind of Ps cannot rule forever. So whether our top-notch shares, you talk of Pidilite, you talk of Nestle, etc., they are like in absolute stratospheric levels at this point of time. So so it can continue. How long it continues, we don't know. But the good part for India is we've got new sectors opening up. Whether the power sector has opened up beautifully is coming up, whether today there's a mining act may change and that segment may take a new lift off, absolutely. The hotels have come back with a vengeance, absolutely. So, so leave aside the old theories. The new players are coming, the new sectors are coming. So I wouldn't say it's a one-way street, but I would say it's a very one-way, very enjoyable and profitable street.
Okay.
The mid-cap index, by the way, is in the green already, and or has cut its losses, and the advance decline is in the favor of advances.
Even for the market, it's not too bad, right? I mean, we were expecting, the SGX Nifty was suggesting about a 350-point cut, and you had said that, it won't be that bad, and it isn't. I mean, it's still down but not out, you'd have to say. Ajay, I didn't want to touch a nerve, but you brought it up, so I'm asking you about PVR. Because, I mean, the box office collections are sinking by the day, right? I mean, what's happening here? And as someone who's perhaps invested in PVR, tracks it closely, what do you do?
I think it's, PVR, unfortunately, Annex and PVR, I'm a holder, so for disclosure purposes, I did my bit. I have seen Maverick 3 times in the cinema, so I have done my bit. I hope you have done your bit as well. What can they do? They have got a software supply which resembles like I'm sorry to use a political term, like a leading party of this country, which is hemmed in by families and friends and producing absolutely sub-quality output. And I don't think they can do very much about it. I think we just have hit a bad patch. They just need to find new places to get software from, or we will have a very troubled investment time in these stocks. Post-merger, I think you'll see some uplift coming in because the economies will start to come in and they will negotiate better deals. But no matter how big they are, they still can't get people to come in the cinemas if what's coming out of the Bollywood. So I think it's a good place to be. I think India has a great entertainment story still to come. We love to go out and no matter what OTT, how good it is. But I think they have reached a problem with software. I do not know whether my leading party in India will solve it first or Bollywood solve it first, but I hope it's a Bollywood for my sake.
For your financial sake. Ajay, so are you bullish, are you bearish? You're not giving us too much. Usually you stick your neck out. I mean, you're saying, well, let's ride this till it lasts. I don't know how long it lasts. And you usually are also slightly contrarian. When everyone is going completely one side, you take the other side. You're not doing that now. I mean, just to give you an example, I mean, just recent statistics, right? I mean, the market here is done extremely well. I mean, for the last, say, 4-5 days, I was just putting out data. The Nifty is up 1%. The S&P is down about, 6%, nearly 6%, 5.9 or something. You began by saying that we're not afraid of FI selling, etc. But does it really happen that way? We go one way and the rest of the world goes another? Maybe we'll all learn new lessons this time. But historically, it does not happen like that, right?
Well, it should not happen, but I think there's a major difference which is happening today. One, of course, I said demographically, we are accumulating more surpluses in our PF accounts, insurance accounts, than perhaps the Western economies. Certainly, Japan is not accumulating any surplus. They're using up surpluses. So to that extent, there is a clear flow difference. All right. The number two is, the fact still remains that the US is far more aggressive, given the fact that where the inflation is, they've never seen this kind of inflation. India is used to 7-8%. They're not used to this inflation. So they are far more rigorously going after inflation. And number two, they still haven't done what is the big trigger negative for the market is QT, quantitative tightening. That the big number has still not come to the table. The repo account equivalent is still surplus by almost $1 trillion as we talk today. Federal Reserve's got a surplus of $1 trillion as we talk today. So, so therefore, there is a lot more damage that the Fed can do to the equity markets in the US at this point of time than perhaps the Indian central bank, which is, I would say, a little more tuned in with the political realities of India compared to the Federal Reserve of the US, which is a little more independent. And therefore, you find comfort that an India Reserve Bank has always been accommodative on the money supply policy. If that changes, a lot of dynamics can change the market. Still, you're not getting the FD rates, what you should be getting given the inflation, because RBI is giving a lease of line to the banks. If RBI adopts what Federal Reserve adopts, a lot may change and we'll become synchronous with the West. Today, we are not synchronous and we're not afraid because we have a little more benign stance by RBI. which has been very positive on liquidity compared to what we are seeing in US, where Federal Reserve has still to get the big bazooka out in terms of pulling out $150 billion a month out of the pipeline. So, that's a big difference. A benign Indian RBI versus a very aggressive Federal Reserve, and it is showing in the equity markets.
Auto stocks are really ruling the roost right now. I mean, expectedly so, right? We were just talking about waiting periods of almost 2 years for some of the new launches. But it's not just passenger vehicles. Tractors are coming back in a big way, heavy commercial vehicles as well. Are you invested here? And if yes, what would you like for the future?
We just moved out of it last week, Sonia. Completely, we have moved out of autos at this point of time. And I think the reason is very simple, that I think they're factoring in a lot more than what is possible in the market. I don't think we are, in our view, it may be wrong totally, market can surprise us. The point of interest rate coming in and kicking in and taking the demand out has still not factored. It takes 4 or 5 months to come into the place. We have found better places to invest our money compared to incremental return that may or may not come in the auto space. And let me tell you something which I've seen historically, this long lines of 2 years disappear very fast. Quite a bit of this is speculative. Today, if you're going to buy a Thar, you pay $50,000 extra dealer, he'll find you a booking to go into. So lots of this is speculative booking as well. One should not take it as a face value. No doubt they are in a good space at this point of time because there's a backlog of demand. But I still believe that the market, and market can be right and we can be wrong, that is not factoring in the high interest rate cost which is coming and sitting in the system and will start to play out in the last quarter of this year. I think the EMI cost is going to cut consumption, and we will find that autos will be one place where demand will be cut. It's not essential, it's not critical, and therefore our call has been to move out of auto as of last week rather than stay in the auto space.
You just look at the bank Nifty, by the way, but it's clearly showing signs of buy on dips. In fact, from the lows, if you see the Nifty bank, the low was 38,803, and that was the open as well. And from that point on, I think we are off almost 400 points off the lows. If you can get that graphic on the bank Nifty, today is the weekly options expiry as well. And first thing in the morning, if people got short, I think it will be very interesting to see. So there's clearly a pickup from the lows. A buy on dips has been the thesis of this market. Now, Ajay, one space where we've seen some problems clearly is IT. At least in the US, clearly the Nasdaq stocks are retesting some of them, their previous lows. In India, we're still way off the lows, but at higher level, clearly there's a bit of a struggle. Your views?
See, IT has a particular problem among all the sectors. It has the highest proportionate ownership of FPIs, has the lowest proportionate ownership of the domestic investors, and certainly very low in terms of HNIs and individuals. And therefore, they are quite susceptible to what happened in the global market. That's the one particular sector in India where the demand supply of stock comes into play very fast, because the moment the price goes up, the FPIs start to sell. And India, whether we like it, we like Infosys, we like TCS, the fact is retail ownership is low, institutional ownership is low, FPIs are over 40%. So what's happening in the US therefore translates more to the share price than perhaps the rest of the Indian economy. This is one sector totally exposed both on the demand side as well as on the investment side. And I think that will keep playing out, because at every opportunity, the FPIs will sell and will book profits whenever the stock goes up for the IT. So IT is a good place for people to retire the stock with, but is it a space for you to generate alpha returns? I doubt it, because 40% holding with FPIs comes to haunt us every time there is a price goes up of these stocks. So if the demand improves in the US, perhaps you can still be safer. But I think till US isn't where it is today, FPIs will be a big sellers in this, and there is not enough appetite domestically. So, just the demand supply of this stock takes over the fundamentals of why you should invest or not invest in the sector.
Two more sectors that I want to check with you, Ajay, which are doing exceptionally well. One is defense, right? I mean, names like HAL have doubled in the last 1 year. BEL is sitting at a fresh high. So is this a space that looks good to you? And the other is hotels. I mean, at the opposite end of the spectrum, but consumption is picking up in a big way as well. Do you like either of these sectors?
We're invested in both the sectors, to be honest. Okay, so that's for disclosure purposes. And the fact is that I think hotels will see a kind of profitability which they have never seen before in their lives. You just have to go through booking.com or Expedia to know what's happening in this segment. And I think the top 2-3 chains will make superlative profits. What they made just now is nothing compared to what's coming in the October to December and Jan to March season. So it's a very clear buy and hold segment. Any correction means you need to get into hotel business. And this is the first time. It's incredible, Sonia. First time in our history of investment where we have put such large money in hotels. I cannot believe we have done it because we always do hate the hotels, being capital intensive and so on. But I think the model of management contracts, supply shortfalls, and the urge to spend of Indians and the K-shaped recovery of India, where the well-to-do are doing phenomenally well. Rack rates of 25,000 were unheard of. Today, we are paying 75,000 bucks a day for rooms. Man, it is the, I don't know. God has really been kind to that sector, and I think they'll make more money. So there's no question you got to be there. Defense, government policy is very clear. The fixed returns to these companies are very clear. They give you a 7.5% to 12.5% return on every order, and all cost is passed through. What better business can you be? PSUs used to suffer because they could not pass through the cost back to the buyers at the end of the day, which was the retail public, whether fertilizer or banks, etc. This is one segment where the government guarantees that you execute the order, we will give you a 12.5%, or in case of Mazik and Dog, say 7.5% return. Now, it's a best business that you got to be local, you got to buy through them, easiest thing. PSUs get the order of priority, like Bell Electronics, for instance. You register with Bell and you can sell easily to the defense sector. You try doing it directly, you cannot do it easily. So the way these companies are set up, the only way to comfortably sell to defense is through these companies. And these will enjoy superlative profits again because cost is passed through. When you take the cost risk out of it, take a monopoly status, it can't get better for you, even though it's a PSU. When it privatizes, we will know it, but I don't think it will happen in my lifetime. But I think certainly sure that profitability-wise, it's guaranteed money on the table as far as these companies are concerned.
All right, Ajay, we'll leave it there today. Thanks a lot for joining us.
Thank you.
Okay, the market, by the way, just look at this. The mid-cap index is about to turn the green. And, I spoke about Bajaj Finance and Finserv as perhaps the first go-to stocks if the market has to see recovery. And, just look at the way some of these stocks are moved. Clearly, there's a bit of a targeted buying in some of these financial names, especially from the FI side. And the first dip has been bought. Now, on days like today, you have to be wary of a second dip. Whether that happens or not, we'll find out. But at least we got the first hour low. And just look at the intraday recovery in all these stocks. Sonia.
Absolutely. So as we were discussing earlier, right, the temptation is to buy every dip. Perhaps you missed out on there was that FOMO feeling a couple of weeks ago that the market is rallying so fast and I missed out. Now when you're getting the dip, the confidence is higher.
And on days like today, I always feel that, we should have index trading available. I think with Gift City, perhaps it happens. Index trading available to everyone around the clock, because this morning, it looked like the SGX Nifty was maybe a bit wrong. 350, it gapped down okay, but 350 perhaps looked a bit outsized.
Absolutely. Okay, let's move on. Bajaj Auto's numbers came a while back. They looked fine on the top line. In fact, the total sales were above street estimates at 4.01 lakh units. But there is a big fall that we've seen in exports. Exports are down 28%, perhaps because of the continuation of the three-wheeler ban in Egypt. The domestic market, though, has picked up quite a bit. It's a strong 49% growth. We have Rakesh Sharma of Bajaj Auto who joins us now to talk about that. Mr. Sharma, first I wanted to ask you what's happening on the export front, because last time you said that you're in touch with the Egyptian government with respect to the ban on three-wheelers. Any update from them on removal of the ban? And do you think this export pressure is something that could continue?
Good morning, Sonia. The decline in numbers which you're seeing in export sales is not really the outcome of Egypt. If you may recall, we had said that there are developments in Nigeria and a few other parts of Africa, but particularly Nigeria, where retails have slid downwards. For two reasons. One is, of course, there is inflation and lower availability of dollars, but there is also an uncertainty due to certain pronouncements by the government of India, government of Nigeria, restricting the movement of motorcycles. Those have not yet been clarified. No gazette has been introduced. But in such situations, and an election is looming large over there, there's an election by February. So what happens is that people tend to postpone their purchase till the time they're very clear about what the forward view of policy is going to be. So really what's happened is quite singularly as well. that the Nigerian retails have shrunk by 25 to 30% for us. And what happens in that is that we like to take a prudent view because it's a long supply chain. And if these retails continue at this level, we don't want overexposure of our distribution partners in terms of stocks. So this month has almost been a nil month of exports to Nigeria, so that we take the hit and get the process of getting the stocks in balance. So it's really that one issue. And of course, the Egypt issue, which is a much smaller one when it comes from when you look at it from a number point of view, a volumetric point of view, it's a smaller one that is a more ongoing discussion, which is continuing. There is testing and approval process, which we are sort of in the middle of.
Okay, so this is important. You're saying that the decline in exports is because of what's happening in Nigeria. There is no official notification just yet, but you're saying that the movement of two-wheelers has been restricted. Nigeria is a big market for you, right? You get about 20% of your export revenues from there?
Yes, that's right.
Okay.
See, there was always a restriction which was announced for Lagos. Now, Lagos is about 10 to 15% of the total Nigerian market. That restriction has been enforced very, very strongly. But for rest of Nigeria, which is about 85% market, these pronouncements are there, but there is no sort of official ruling or enforcement. So, but for the moment, consumers, customers, and the trade tend to take a cautious view. So we are monitoring the situation, but luckily this month we decided to sort of temper down the channel stocks and reduce the exposure.
Mr. Sharma, just on that export market point, especially in Africa, the currency the forex shortage, is that because the dollar is strong? I mean, it's one of the strongest years on record for the dollar against a broad range of currencies. How does that impact you? Is that is that also likely to be a temporary issue? If you can give us some context.
Yeah, of course, this is a very important factor, particularly in all the emerging markets, I would say, and particularly in Africa. The strengthening of the dollar and the movement of flows towards the United States reduces the dollar availability and, of course, makes international trading more difficult in some of these countries, Ugandas and the Ethiopias, and the governments tend to step in with a few more controls. And but over the last 10-15 years, we've been through these up and down cycles multiple times. This is the nature of the beast, and we have to flex pricing. We have to manage the channel stocks so that the distributors are not overly exposed, and then equilibrium returns, and life carries on. But yes, in the short term, certainly the restricted dollar availability makes management difficult. And this uncertainty at the moment in Nigeria for maybe a couple of months or so, 2 or 3 months, will certainly cast a shadow on exports, export numbers.
Before we go to the domestic market, just wanted an update on what's happening in Egypt with respect to the three-wheeler ban. What's the latest there?
Like I said, Sonia, the engagement with the government is on. We are looking at alternate fuels. We're looking at alternate formats. It's a process because we have to create classifications. We have to get approvals and consultation with them. So that process is very much on. But in the meantime, there have been no exports of three-wheelers, and it was a substantive market from there. But if you look at the three-wheeler exports, they've sort of moved up slightly. There was a time when we would export 50% of our three-wheelers to Sri Lanka, and then Sri Lanka market fell off, which actually launched a furious business development initiative at Bajaj Auto. And that's again what we are doing. We are building at least a dozen new engines for growth in three-wheelers. There is luckily opportunity. These are small right now, but we hope that these will come to some kind of fruition. And if Egypt market comes back, I think the three-wheeler business is going to again bounce back into those kind of levels which we are doing earlier, which was closer to 25 to 30,000 units per month.
Okay. You want to tell us a little bit about the domestic market as well? There, the growth has come back, at least on a year-on-year basis. Of course, the base was also low same time last year. But are you seeing a pickup in the mass market segment? Is the worst of the chip shortage issue behind us?
Yes, thankfully I can now say that the semiconductor issue or the electronic components issues which we were facing, and well, they continue at an industry level, but as you will recall, because of our particular over dependencies, we had sort of borne the brunt of it. But over the last 3-4 months, we have developed multiple sources and reduce these dependencies. And August has been a great month of bounce back of the supplies. And we have been able to replenish the channel stocks to the normal level, absolutely in time to now look at having good sales during the festive, which is sort of commenced with Ganpati, and then there is a gap, and then there is the Navratris, which by end of September kick in. So we are very, very pleased about that structurally now Bajaj Auto is at a much better place than it was in February. But of course, we had to sweat it out and lose a lot of business in the previous quarter. But that's behind us. And along with that, the other question which you asked was about the industry. We are sensing that, yes, in a way, the worst is over, because we are seeing consistently now double-digit decline becoming single-digit decline. And I think this month, the retails are showing that they're now at an even-stevens level. And we can expect a small growth in the industry going forward into the season, which is a very healthy sign. At the bottom, which is the entry level, that is the only place which we are facing trouble. But as you know, our primary focus is in the 125cc plus segment, which is the 125cc's and the 150cc's. There, the industry is doing better, particularly in the 125cc. And there, our new launch of the new platform in Pulsar, the one has been accepted very well. So in a very important part of the industry, we feel that we have now propositions which are full of vitality, and we are very optimistic because this segment is showing a decent growth.
Okay.
The only thing is...
Sure. No. I actually take that point because after a long time, I'm hearing you so optimistic. At least, your optimism has gone up compared to the last time we spoke. You're saying that it used to be a double-digit decline. Now it's a single-digit decline. And if all goes well, there's also a small growth that you're looking at in the domestic industry. Has your market share gone up? If yes, what is it right now?
Well, this month, I think you will see a very big bump up in the market share based on billings. The retail numbers I have to still look at. But that's because we were building the channel stock. But what is pleasing is that, we were almost absent in the market for about 2-3 months because of the semiconductor shortage, which was particular to us, which was more severe to us. What is delightful is that in this month of good supplies, the market share has immediately zoomed up to its old levels, and we are at a 19-20% share. Though you will see when you do the maths, you will see that it is 22-23 in terms of sales to dealers, but that's because we are replenishing stock. We are back at our original levels of 19 to 20%.
All right, Mr. Sharma, thank you very much. It's a pleasure having you with us here as always on the program. Thanks indeed for joining us here on CNBC-TV18. Thank you very much. Well, the market is now off the lows. I should say conclusively, decisively. We're down just 120 points and quite a remarkable recovery already in place. We're at the day's high, which is last 30 minutes high. But already 100 points off the lows on the index is what we have. Banks, PSU Bank Index is up 1.4%. So that is where, in absolute terms, day on day, you're seeing the biggest change. The Nifty PSU Bank Index. The Real Estate Index is up 1%. That is another one, which in absolute sense is jumping. The Nifty Auto Index is up 0.5 day on day. And the small cap index is up 0.4. I think Anuj earlier pointed out both mid caps and small caps turned green Mid-cap index is doing a little, I mean, it's up 0.15, but it's in the green. So that's the big point that we want to make. And of course, you want to talk relative, a lot of stocks in the green, but off the lows by quite a margin. In terms of Nifty stocks, it's Bajaj Finserv, which is up almost 4.5% from the day's low, topping the charts in terms of the fastest and the most amount of recovery that we've seen. Well, time for a quick break now. Up next, we get chatting with Rahul Mittal of Rights India to talk about their new 361 crore rupee order to redevelop the Kollam railway station. What will that mean for the business going forward? We also connect with Angshu Malik of Adani Wilmar to discuss their business outlook amidst fluctuations in edible oil prices. Stay tuned.